Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A second bearish black crow yesterday and a more than suitable follow-on lower to the previous session's combined bearish dark cloud cover pattern and bearish double. Prices dropped down to the congestion in the 108.68 to 108.22 area, closing just under the short medium moving average, currently at 109.27. Below we have a further small congestion band dating from July 2014 between 106.79 to 107.46. And then nothing much until the heavy congestion band below that between 101.55 and 103.34. Overhead we have some light resistance at 111.06 and 113.04, but we have a wider congestion band further up between 115.70 and 120 even. Previously, I'd started to look at the potential targets on the upside for the recent descending triangles, as well as the double/triple bottoms. For the larger March to April descending triangle, we have a potential primary target X1 in the 132.10 area, for harder secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, we have a potential primary target X3 in the 120.5 area, with a harder secondary target X4 in the 129.20 area. For the double/triple bottom pattern, we have a potential target X5 in the 126.5 area. Okay, have you got all of that? Well, for all that, it seems these patterns are seemingly stillborn, and the action since early April could be seen as a possible rectangle pattern. I'm not sure on this as yet. I'd like to see how and if prices manage to deal with the downside over the next few days. But I'm most definitely putting all the targets topside on probation, subject to possible retirement. So far today, a test up to light resistance at 111.06 and a rejection back down. Below the congestion in the 108.68 to 108.22 area and into the next congestion area in between 106.79 to 107.46. Spot gold today. An indecisive doji cross yesterday as the market continues to somewhat stabilize just under the slowly rising long moving average, currently at 1839. I'm not so sure this halt should be seen as a consideration of where we are, maybe a pullback up, but instead as a pause for the market to catch its breath before, maybe, attempting a further move lower. The strong move down since prices pierced the very slowly rising long moving average needed a pause, as prices had reached down to kiss the middle time, currently at 1771, of the early March to late April bearish Andrews pitchfork, plus a test of the previously mentioned congestion between 1790 and 1770. We've since had a small reaction back up, but it has not been, as far as I can see right now, a turn towards the bullish side. Overall, the big bearish Andrews pitchfork is still the showrunner here. So far today, well, a move higher over the lesser Fibonacci line at 1826, but not much more. Overhead, we still have the glowering from above the long moving average. And that's currently at 1839. Thank you for listening. The short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.